Hi there, and welcome to the Live Vybrant Podcast, where we explore how to live with energy, purpose, and intention. I'm your host, Joshua Haag, a holistic lifestyle, performance, and success coach with a background in professional sports and 2 decades of coaching experience. Each week, I sit down with experts across a multitude of fields, including wellness, finance, and personal growth, to uncover practical strategies that will help you thrive in every area of life. Let's dive in and help you live your most vibrant life. I'm so excited to have on what I consider one of my biggest mentors. He's the CEO of Noble Gold, as well as part owner of Guardian HR, Colin Plume. Welcome to the podcast. I'm so excited to have you here today, man.
Thanks for having me on, Josh.
Of course, buddy.
How have you been? How's everything with you?
Fucking fantastic, dude. We're on a roll. Product releases in about 3 weeks. Website's just being finished. The community is up and running in terms of the social portion to it. We're just about getting ready to start dealing with marketing and all that good stuff. We're starting to do some A/B testing for the school stuff and just seeing what works. And I'm going to do the marketing while my girl is, but I'm not doing it through some sort of company or anything this time. I'm just fucking hands down doing it myself. I'm tired of dealing with that shit.
I mean, whether you hire somebody or what, you're still end up doing it all yourself anyway. But
Correct.
I literally just left the marketing. That's what you have to do all day. You will never not be focused on lead generation and what kind of leads and quality and, Google. We met with our Google person before, and it's just amazing how much you can learn just being in those meetings.
And this is for your marketing company?
No, this is for my gold business.
Okay.
I mean, primarily every business I own, it all comes down to nothing moves without marketing. You see all these companies. I was talking to a guy, my HR business, there's a competitor. They raised like $150 million and they basically spent, I think, 80 or 90 million on marketing. And within 12 to 18 months, I will be pretty close to generating not the scale that they were at, but a very good amount of closed deals for, 1/100th of the amount of money that they spent.
How?
It really comes down to that you can do whatever you want and spend money on Google and radio and TV, and you can just splash. But if you don't build a strong brand connection to their product, like if you can't identify what you do different, and if the person that is looking for your product doesn't see that differentiator, because they don't all buy at the same time, right? They're going to check you out. People are smart. They read reviews. They say like almost 80% of transactions now, they're going to read a review. If you don't have good reviews, which this company does not, they have terrible reviews. They're just pissing money away, basically, because they didn't focus on the product. They didn't focus on the brand. They didn't focus on the client. So yeah, okay, maybe they're getting a lot of clients, but are they going to retain that client? Are they going to get them to re-up? Are they going to get them to, good example, my gold business, we're averaging close to 40% of our business is actually coming from referrals. It's unheard of in the gold business to have that high of a ratio. It's because we really focus on the client satisfaction and make sure that the client is getting exactly what it is. And if we make a mistake, which we knock on wood don't a lot, we fix it, and we fix it hard, and we fix it fast. And I get on the phone, and our team is on. Anytime there's any problem, we are all over it, because nobody does everything perfect. But at the end of the day, that image that you get and that bad review and that thing that people see out there, it sticks with people. And so I just really early on in every business have just focused on having the perfect client satisfaction rate and build it and continuing to modify and making it smoother and easier. And if you do not do that, then it doesn't matter how much money you're spending on marketing. The end of the day, your conversion will be down. You will waste money. And also too, people listen to these guys, these Google ad guys and these radio guys. And Josh, like how much yes have you gone through in your career with marketing?
It's ridiculous.
And, they say like, oh, we're optimizing or, oh, we're doing this. Well, I can tell you this, that the ramp up time on a lot of these channels is faster than what you think it is. And when they're optimizing, they're setting things up and you're paying these retainer fees, you can get things up faster than you think, and they should have wins early. You should be seeing, when I buy or when I'm doing it like a campaign into something, I don't always look at a conversion on your sleep formula. Like, you will be looking at conversions, right? But some of it'll just be like the intent. Is this the right person that's looking at it, getting the ad? Do they have intent? Maybe they need to come back and check a few times and you need to retarget them with ads. But, if you're not getting the right person to the landing page early, it doesn't matter. Like, they're never going to convert. So,
Right.
These are the things that I think you have to be looking at daily. And a lot of it is happened because early when I started my career, like, I only had a little bit of money and that was it. And every time, I started with $5,000 a month in marketing, and I lost money fast and I had to adjust fast. And so I had to learn about these things. But yeah, I mean, you're right. Like, you got to keep your hands on marketing. And if you're a business owner and think that you having the best product is going to win out, then you're completely wrong and you don't know anything about what the world is.
And what's really interesting, I have gone through my, shtick in terms of the different marketing companies and each of them pulling their own shenanigans with me. What's now happened is we ran a couple different ads at like $10 a day. We just wanted to see what the reach looked like. Who were the ones that just clicked on the ads? What traction could we get? What cost per click could we get? We were just looking at the metrics here for this, literally we've been doing it for a week. And what's so funny is we actually got a really good amount of traction conversion. People are watching my videos for a long period of time in terms of the ads that we sent out, in terms of we're getting close to 15 to 16 seconds of people stay engaged and they're on the video. Great. But what we noticed was then that I was not seeing the conversion on the back end in terms of coming into the school. They weren't from the ad, they would click and go through it, and then I would not see anything happen past that. What's really interesting is for the first time that I felt as though, okay, I know exactly where to go. My girl and I talked. We said we have to start to work now on the conversion portion of your about page. We got to clean these up, the videos, the copy, all that stuff. No marketing team that I ever worked with before, in the amount of money that I spent, gave me tangible, here's what's happening, here's where you're wrong in the funnel line, right? Because it's all a funnel. And it's really curious for the first, and I'm not an idiot, and I have learned, and I've had you mentor me and other people give me coaching and advice. So I've learned the process, at least at my level. And it's fascinating that this is the first time I felt like I actually have a tangible, here's what happened, here's the result, and let's make some changes. And it's bananas that marketing companies, I guess, as a whole, don't do better with.
Yeah, I mean, you're having an issue. They're abandoning the cart, right? That's what they're doing. They're getting there and they're not finishing. So how do you get them to finish? Is it too complicated? Like a good example, so I bought in 2 years ago when I started Noble Gold, I had an office manager, I didn't have an HR person, and I had a terrible payroll company. And my friend of 25 years, Matt Taylor, said, I met with him. I got a call. He goes, I have an HR company. They're an outsource, but they have legal services included. They can help you get a handbook, and you can call them if you have problems. It's dedicated. So I hired them, and then I said, I got a problem with payroll. So I hired his payroll company, which now, 6 years later, I'm a part owner in both, because I used these for 5-6 years. And I know I needed that. I needed help with that. And I found a good product. And, it's one of those things that you just, you really need. But what we're starting to do is realize that, like, for the HR and payroll business, the buyers of these, the HR professionals and these owners love email. They love to read emails. So, and because a lot of my big competitors have all these email lists, I'm like, man, they must be really reading. So these people so we came up with this idea to come up with these two ideas. And I had never done this before. I mean, I've done email, but I've never done a dedicated email that's different than the brand. And so we came up with these two ideas. And then it was like, how do we learn? How do we get the email out? So then it was like, okay, well, we're going to use the name of the email companies. It'll come to me in a second. But basically, I was like, how do we get them to opt into this newsletter? That's the game. Like, how do you get them to opt in? And then when we went to the company to see, I was researching, and even specifically, they wanted you to put your email, and then they wanted you to fill out all of your information. I'm like, nobody's going to fill this out. Nobody's going to spend all this time. But actually what I realized is that once they got your email, you were already opted in, so that you didn't have to fill out the other thing. If you did, they got
it was just extra disqualifiers or extra buyer information.
Right. And it's because I've learned from Noble Gold and my business that like when you make it too difficult to do anything, people will just bounce. Just like what you're going through with the cart, right? Like if there's too many things, and even if you make it easy, they will bounce too, right? And you're going to have to retarget them.
That will always be a part of it.
It will always be, yeah, it's they get excited, they need your service, they get in there and then they see the price, or they see, even if it's the best price, they lose, they lose momentum on these things. And that's why you have to retarget them, but it's a new thing in that, I've been doing this for over 10 years, and it's just a new thing that I've never tried. So now I'm trying a whole new marketing through this idea, through this email. So we're going to build out this email. So basically my partner Matt is this super fitness guy. So our idea for him is his newsletter is going to call it 2mm Advantage. And it's literally how he lives his life. It's a Tony Robbins sort of theme about how you just kind of make these small shifts. And so we built a whole newsletter, and our YouTube for him is going to come out. Actually, it comes out Thursday or Friday of this week.
Cool.
And it's just him about how he's built his life. And he's a super workout guy. Like he's a high rocks guy, and he's like optimizes everything, and he eats perfect, and he's just one of these, and he's 50 years old, and he's a machine, but he does this for everything. His workouts are like that. He wants to get better. His business, he has these ways of improving every day at his business. He constantly improves. And so the cool thing for me is when I bought into this business is I'm learning from him about how he's built, he built and sold another business, really with no marketing, just with networking. Basically,
just to be clear, this gentleman is the co-owner with you of the HR business.
Yeah.
Okay.
But we're friends for 25 years before that.
Gotcha.
Yeah. So sorry, I know I'm running on tangents here, but in essence, I'm like day to day now working with Matt, learning about how he built his business all through networking, no outbound marketing. And he just built it through like relationships. He had a whole health insurance business that he built and sold all through networking. Literally consistent, fundamental networking and relationships. So it's amazing day to day. I'm like learning from him, like, man, because with my gold business, I really didn't do a lot of marketing. I mean, we did digital marketing. I didn't.
Wait a minute. That is what? Can you elaborate on that? Like for me, I thought you marketed hard and a lot.
I didn't do any networking. We did a lot of. And I would say networking is a way of marketing, right?
Okay.
Like networking is another form. He built his business by meeting with CPAs, meeting with lawyers, meeting with business owners, and just consistently meeting with people. And they liked him, he had a good product, and they'd refer him business. That's how he built his business. I don't know anything about this. So I'm learning day to day, like about this whole side of it. And I'm building on the marketing side, I'm building ways to assist him to make the marketing and the networking he's doing is better by doing email drips. And so this newsletter, this 2mm Advantage, actually was created, Josh, because I want to continue to send them content, because you can't meet with somebody every week, right? So the goal is
touch points.
It's touch points, right? Exactly. So we built this newsletter and this YouTube channel as another touch point for all the business owners and the networking that he does, so that even if he sees them for coffee once a year, we get them subscribed into the newsletter, and then they'll see videos of Matt and emails, and they'll stay in front, so they can think of us when they think of HR and they think of payroll, they'll think of us in a different way, right?
Makes perfect sense.
Yeah, this is all new.
You never did for Noble? You never did any sort of newsletter or anything like that?
I did newsletters, but I never networked. So to be clear, I never did. Everything I did was, how do I get, the most amount of people to see us, the right people. And because we've talked a lot of times, we started with influencer marketing, and we were the first gold company to do YouTube influencers. Like nobody did it before us. Everyone thought we were crazy. Nobody thought that people were getting this kind of information. This was 10 years ago. Nobody thought that they were getting this kind of information on YouTube. Everyone just thought like, oh, they're just watching cat videos and all that stuff. And I didn't know either, but actually I didn't have a choice, because we needed something. We had to try something new. So we just threw a flyer at it and signed up with a few guys, these influencers on YouTube, and they started running ads for us and doing interviews, stuff like this, just like we're doing right now. So yeah, so that's kind of how that whole thing started. But yeah, it's been fascinating because I've been able to get into a new business that's more B2B marketing. So now I went from B2C to B2B, and now I'm learning about how to get in front of business owners and HR professionals. And so that's day to day, that's like really been, a lot of my new focus for the last 2 years is kind of learning about that and how to get in front of them. And as I mentioned earlier, like email is big. So we're building these newsletters and it's really fun and it's really exciting. So, with Matt, we did this whole shoot where we went up in the mountains and we talked about him and his life, and we got this drone footage and we're going to build this cool thing, and I'll send it to you. It should be live.
I would love that. The whole point of this podcast, I have, in terms of people I send it to, right, our client list, and then my list that I built over time, I have entrepreneurs, wannabe entrepreneurs, moms, dads, young guns, everyone just looking for, and the feedback I get is people grabbing different pieces of knowledge from these. I've interviewed some amazing people, and now you, obviously, with your multitude of backgrounds, from the gold and silver to your author journey to the new companies, hot sauce. I'm excited to see where the hot sauce business is. And realistically, you as an inspiration to me as an entrepreneur, just as is. I talk to so many different people who, whether in the community that we're doing, through my own networking, who are so afraid to take a jump, to take a leap. You do it, you're on to the next business. You're a true entrepreneur and very good at it. So it's an inspiration to be able to bring that in, and I think it could light people up. That's all.
Yeah,
that was kind of my premise for today, is to just talk to you about your journey, the things that you're doing right now. Obviously, talk a little bit of finance in the gold and silver world. I just saw recently in the last couple of months, silver has basically doubled, right?
Silver's doubled. Actually, I was talking to somebody funny about, they were talking about gold, and they're like, yeah, I was going to buy gold from Costco. It was $2,000 an ounce. And I was like, well, it's $4,000 an ounce. So sorry.
But you get it from Costco and you buy 10 pounds of it.
Yeah, exactly. Yeah.
The bulk.
Yeah. It's silver's gone, and it, my book, which is up above me, Silver is the New Oil. I tried to write that for years, finally connected with a guy, helped me write it. I had the outline and kind of the idea, but just didn't have the time to get it all the way. But we finished it last year in December. So when the book came out in December, mid-December of last year, silver was at $28 an ounce spot price, and then silver broke $53. It's pulled back a little bit, but yeah, it went on a meteoric rise, just unbelievable. And it makes sense, and I talk about it in my book. There is so many industrial uses for silver that people are not aware. And since 1983, the Hunt brothers tried to corner the silver market. And since 1983, there's more than 10,000 industrial uses that have come out. And some of them are massive. Yeah, some of them are massive, like solar panels, like EV. These are big usage. Solar is, they say, between 8 and 9% of silver usage above ground, and they think it could be between 15 and 16%. So solar, they're going to need it. It's part of what they need for silver. What they need to build solar panels. Then there's even small things, like most people don't realize that almost in every refrigerator, there's 2 ounces of silver. And why that's important, it's really important because if you think about it, silver recycling is about 5 or 6% of what's above ground. And that's a great example, is that if there's 2 ounces of silver in a refrigerator, is anyone going through on an old refrigerator and going to try to find that silver? No, they're not going to. If there was an ounce of gold, they would, right? Because it'd be $4,000. But so if you think about all the refrigerators that are made and all that usage, that is just gone, right? It's never coming back to the market. So that's important because you're never going to have that silver used again. So they have to continuously find more, right? They have to continually do it. The Silver Council, the World Council of Silver, says that the shortage of silver right now is 148 million ounces per year. Pretty significant amount. And it's been growing year over year.
What does that mean to the unknowledgeable?
That means that what will eventually happen in the future with silver is that it will be hard to buy it as an investor because most of it will be used for industry. It won't be as easy to buy it because if the government so to answer your question, Josh, if the government needs silver, they will pay whatever it takes. Last year, they bought $400 million in silver, the U.S. government. If silver's at $200 an ounce, they will, and that's the spot price, but it costs them $220 to buy it, and they need it. They're going to buy it. So that's the thing is it's one of those metals that's still affordable enough that there's all these uses popping up, but it's not getting recycled enough. So it just creates this inherent unbelievable demand. So yeah, I mean, when I wrote the book at silver's at 29, I predicted that it would hit $58 within 18 months of the book being released. It obviously went faster and hit that, it hit $53 within 12 months. But I had a lot of data behind me to back up that educated guess. Like I wasn't just like throwing darts at the dartboard.
Yeah.
I knew that there is this unbelievable demand. And then coupled with the fact that with President Trump's agenda, his agenda is high growth, but with high growth there is high spending and high debt. So, and whatever, I'm not getting into the politics of it, but that is the strategy. So that strategy is a good strategy for precious metals, like high growth, high spending, like the dollar's going to lose value, which it's down 11%, like all of those things. And you saw it as soon as he got elected. In November of last year, the gold price started to take off because the market, the hedge funds, and all the big buyers knew that this was a massive opportunity. And so you saw incredible buying in gold and silver. So, the price shooting up, to go up that fast was faster than I thought. But to get past through 40 or 45, I mean, those numbers were
massive.
Yeah.
Really fast too.
Yeah, really
interesting.
Fast, so. And gold's done the same thing. Gold's moved up pretty significantly too. Gold was sitting in the, $2,000 range and then broke 4,300 right around the same time. So gold's had a historic run also.
Now, is it something that we are on a historic run with it, but will we see a correction? And if so, why?
Sure. Yeah. I mean, I think, we already did. When gold broke 4,300, it pulled back to now it's sitting in the 3,900 range. Yeah. So basically, if you look at charts, there's always a consolidation of precious metals, and so you'll see it like spike, and then it'll have like this range. And so the question is this range that it's in, let's say the 3,900 or 4,000, is this a sustainable range, or is this where people will just can drop and sell? And it could change depending on what the market is saying. My gut is we're building a floor and a range. And I think that will stay steady for some time because, you see it when it hits 39.50, you see buying. If it wasn't a sustainable range, then you'd see at 39.50, it kind of creep down. And listen, maybe it could hit 37, 3,800, but my gut is it's building a new floor based on the demand that you're seeing, the trading range. And you could look at the charts and analyze that too. There's always these checkpoints where it's like, if it hits 3,800, could it get to 3,500 maybe? There's always these sell points. But overall, the trading range is looking pretty positive. And then I do think there's one thing that could really, and I'm like a man on a mountaintop screaming this, and I'm maybe the only one that believes this, but I actually believe that the government's going to do quantitative easing. And I think when Powell's out in May of next year, I think they're going to put Besson in. And I think he's going to go gangbusters and like open up the money supply because they need to get things stimulated again. And so my gut is that they do quantitative. They stop the tightening. The Fed said they're going to stop tightening, and then they can either just keep it as is or they could loosen it dramatically. And my gut is that they do quantitative easing, which would push the price of gold and silver. Just then you'd.
And you're saying quantitative easing.
Yeah, quantitative.
What does that mean?
That means they're just adding money to the money supply. We did it in 2008 and 2009. So we had issues in 2008, 2009. We had the full collapse. So they needed to get more money out there because the banks were nervous. They didn't want to lend. So they needed to get money out there to stimulate. So it's called quantitative easing. We did phase 1, phase 2, phase 3 from end of 2008 to 2011. And gold and silver went, really.
Why would gold and silver go up? Because wouldn't just introducing money to the market basically devalue the market?
Introducing money is you're saying that the dollar will be weaker, and you're basically in an infusing inflation, and you're basically making money so easy and so cheap that limited supply items do well. And so the two things that happen.
Okay.
So
gold.
Gold and silver would go up.
And in turn, would you probably see then a drop in terms of your normal market in terms of stocks, like actual trading?
Yeah, stocks from 2009 to 11 kind of they went up. They were kind of sideways. It didn't have massive increases. And then when they stop it, it's sort of like what happens. In 2011, gold and silver dropped a lot. So maybe we could have that drop once we go on that ride for a year or two, because it just floods the market with so much cheap money. And I think they're going to do that for a number of reasons. One, I think the housing market's going to need it. I think the commercial real estate market's going to need it. Because even with them cutting rates, they've started to cut rates a few times. Rates have not dropped that much, and the banks still don't have as much confidence as they need to lend. And they're going to need to find a way to give the banks money to get lend. They need lending to pick up for real estate to pick up. And so I think it's one of the ways that they'll try to open up the market.
Interesting. Now, for the younger or uninvested, how do we get into gold and silver? How do we start? How do we either work with like a company like yours? Is there a minimum? And then my follow-up question to that is, what's a good number to just start to buy in with? Do I need 10 grand? I need 50 grand? Like, what does that look like?
Well, I buy gold and silver every quarter. And when I started, I didn't have a lot of money, and I just did whatever I could. And I would say that everybody should start thinking about, and I'll caveat this, is that if you have credit card debt at 30%, you should not be thinking about investing. I see people like, oh, I want to start investing. It's like, well, don't start. The investment is to get out of credit card debt. You got to get out of the debt first. Student debt, lower percentage, I'm not as concerned about. A lot of people have it. You can still have that invest. Most people have a 401k, and a lot of companies put money in and match. My company, we match for people. If a company matches, you should put money in. You should start every month getting money away. Either do a 401k or do an IRA. I would start there. With gold or silver, there's smaller denominations of gold and silver. You can pretty much invest any amount. We have a $5,000 minimum just because we do a lot of hand holding. We focus on IRAs. So we're a little bit different setup, but I would say if you had an old 401k, we could help you put it in gold and silver. If you have $5,000, we can help you. But any dollar amount, there's places out there that you can buy from. And I think the key is, when you think about buying gold and silver, you're buying insurance protection against the dollar losing value. You're buying a way to keep up with your quality of life in the future. And you have to think that you're going to hold that gold and silver for the long haul. It's the money that, when you put it in there, it's like sleepy money. You're like putting it away. There's other investments that you might put it into and get a return, like crypto, and then you take it out and you start a business or you do something else with it.
Right.
But you need some investments that you're not going to touch. And gold and silver, I think, is one of them. I think investing some in the stock market, and then I still think real estate long term is an incredible investment, but you got to be ready for the ups and downs. Real estate was phenomenal from 2001 till 2022, and then it got rough for a few years, and I think it's still going to have some rough patches. So you got to be really ready to weather the storm if you're going into real estate. It's not a passive investment. It's long-term work, strategy, but the benefits are there's tax advantages, there's incredible tax advantages, there's appreciation. And then the one thing that I think will happen is if prices continue to stay or maybe drop a little bit more, there will be an opportunity where you can actually buy properties below replacement cost. And I think if you can buy properties below replacement cost, you will always do well in the long term.
And what does that mean?
That means what it would cost to rebuild the property today. So like, let's say your home that you bought, let's say you buy it at $500 a foot, and to rebuild that home, it costs $600 a foot. If you can hold on to that rising construction costs, and there's crazy statistics about construction that like out of like 8 people that retire in construction, only 1 person comes in. So just the labor cost of a construction will continue to go up. So I think that you have to think about that long term, is that if you can get onto a piece that's a good piece of real estate, you can hold on to it and cover the costs, and you buy it below replacement cost, eventually your house that you bought for $500 a foot, it'll be $800 a foot to rebuild, and you won't lose in that scenario. But I think there was a time there that people were paying well above replacement cost, and they were just buying it based on cheap debt, and they got into problems, and we're seeing it now. A lot of people are losing properties right now because they bought it just on the idea that they could buy it with 3% money and then they'd flip it in 2 years. And I think that flipping market has really gone away.
Interesting. And now I think my follow-up to that is, how would you break up an individual's profile in terms of their investment strategy between gold and silver, between real estate? Like, how would you differentiate that?
I would say you want to have I think you want to have 50, 60% in equities minimum, stock market. I would have at least 10 or 15% in precious metals. Actually, the Morgan Stanley CIO actually came out and they changed their whole strategy. They used to tell people to do like 80% equities, 10% bonds, and then 10% fixed income. And they came out and their new recommendation is 60% equities, 20% fixed income, and 20% gold. That's from Morgan Stanley. So that's
when you say fixed income, what do you mean?
That would be like dividend producing assets that provide a little bit of a return, maybe an annuity. Not that I recommend annuities, but maybe an annuity, but something that has some kind of payment that you're receiving. It could be like in a REIT or a combination of REITs, but you're getting a little bit of a dividend return.
Understood.
In that fixed income, whatever that product is that you are invested into.
And why do you think that shift has been made? Because of what's about to happen with the gold and silver?
Yeah, I think Well, and I also think they're not comfortable as they used to be with the bond market because the returns are still so low. And that's been the biggest shift that I've seen, is that people have moved away more from bonds because the true inflation numbers are starting to come out a little bit more. And now they're like, wait a minute, let's say inflation's 7 or 8%. Forget what the government says. I'm not going to make 4% in a bond. Like, I can't. Whereas before, people believed the inflation numbers from the government that it was 2%. And so when they made 2% in a bond, they felt okay about it.
Right.
But now when you're making 4% or 3.5% and inflation is 7, 8, 9%, which we've experienced. And I
we're
think
losing money.
We're losing money. So then bonds don't make sense. So then it's like, well, what else out there? They're like, oh, gold's up 50% this year. And I'm not saying it's going to do that every year. But I think that shift was the idea that the bond market's still not in a place where they feel comfortable recommending, and they're realizing that people need to make higher returns. So I would say, like, for the investment, it would be some combination of what I suggested. And then I think also people should be, if they're employed somewhere, they should be thinking about either gig economy jobs, other forms of income, because businesses and generating income will get you a much higher return than any of the things that I recommended. I mean, the right business that you do should make anywhere from 20 to 50% on your dollar, on your time. And so you cannot repeat that. And that's part of the reason that I bought into these other businesses, is because I realized I can make, I'll make 8 to 10% of the market, and gold's going to do what it's going to do, and real estate's going to do. But how do I make 20 or 25% returns? And the only way you can do that is being involved in a business. That's the only way.
Right. Actually generating the income versus relying on a passive stream.
Correct.
Yeah, it makes a lot of sense.
Yeah, correct.
Now tell us a little bit about your book. I wanted to quiz you on a little bit. I know you dropped it a little bit, but what's the title, the inspiration? Give us the lowdown.
Yeah, Silver is the New Oil, which is right here. Came out in December last year and hit number 1 on commodities on Amazon.
My man.
Yeah, because my mom, she bought 1,000 books. No, we did pretty well.
I firmly believe that she did too.
And it's a book. So the whole book's about silver and how I believe that silver is the great opportunity for wealth. And I parallel it with what happened with oil in the late 1800s. And I'm not saying when I say silver is a new oil that it's going to replace oil. But if you look at the charts, I show a lot of the usage of oil and a lot of the usage of silver, and I show the difference and how they're sort of overlapping. And I go through a lot of the usage and sort of my story. So that's 95% of the book. And then the last 2 chapters of the book, or the end, I did bonus chapters. I did a chapter on platinum, which platinum is also up 60% this year. And then I did one chapter about real estate that I talk about the one strategy that I think will still work, which is basically, I think there's opportunities in satellite cities, which basically is like, not the main city that everyone's moving to, but the city that's right outside of that city.
Mm-hmm.
And I list the cities that I have identified, and I show two of the cities that I bought properties in the last 2 to 3 years. One of them is Greenville, South Carolina. And so I bought 2 properties there. And so I give my reasoning why I think there's still, because at the end of the day, it's still about buying. Real estate it's the exciting thing about it. It's all about the deal. If you don't get the right deal, you can never do well in real estate, and it doesn't matter where you are. And the last few years has really proved that to be true, because everyone that buy high quality real estate, which is all the apartments that I own, all the triple net property, everything that I've bought is high quality real estate, and we've been able to sustain through this time and continue to get paid on dividends because they're high density areas that there's a demand there. Whereas a lot of people were like, well, I want higher returns. I don't want to make 7 or 8 or 10%. I got to make 15%. So they went to these cities that were too small, that didn't have enough growth. And now they're basically handing the keys back to the bank. And it's because you still have to buy the right deal at the right time in the right location. If you get cheap money, it's a bonus. Everything's a bonus. But so I talk about the way that I look at deals in real estate too. And that's what I tell people is like, I'm invested in a lot of things because I think, gold's going to have its heyday, and I think real estate's going to have it. And as long as you're buying those things at the right price, at the right time, and you buy them consistently, you will win. But trying to time the market, the thing that's funny thing about gold is everyone's always trying to time the market in gold. I can't even tell you how many conversations I've had for the past 17 years where they're like, it seems too high now. I shouldn't buy. And it's like, well, if it's a part of your portfolio, if it's a good asset, which gold is, you're going to do okay over time. And so everyone that bought at 2000 or everyone that bought from Noble Gold at 1400, they're doing pretty good because they diversify.
So technically, with what we just said in terms of what the gold and silver market is doing right now, is now a good time to buy?
I think as long as you're realistic about how long you should hold things, which you should always plan to hold things for 3, 5, 10 years longer, I think you're going to do okay. I think unless you think the dollar is going to get stronger, unless you think the government's going to pay off all of our $37 trillion in debt, if you think those two things, then I would not buy gold. If you don't think that we're going to get stronger, you think we're going to go to more debt, you think the dollar is going to get weaker, and if you think your buying power is going to continue to go down, then you just got to look at gold's track record. And it's performed well. If you go back 100 years from now, a $20 gold piece, you could buy a lot with a $20 gold piece. That same $20 gold piece, which is 1 ounce of gold, is $4,000 today. So 100 years ago, you used to be able to take your wife out to dinner, you could buy groceries, and you'd still have a little bit left over with a $20 gold piece. Today, that $20 gold piece is worth $4,000. You could pay your
vacation in Hawaii.
So it's literally been able to do the same thing 100 years ago that it's been able to do today, which is basically keep up with your quality of life and your quality of living. And at the end of the day, everyone in retirement, that's all they want. Everyone just wants to be able to go, I want to be able to go on one vacation a year. I want to be able to give some money to my grandkids. And my house is pretty much paid off. I just want to have the same quality of life, right? That's all anybody wants. Gold has provided that opportunity for people.
Brilliant. Listen, I want to change gears just a little bit. For those listening, Colin does all of this and at the same time is a leading example of what a father and a family man should look like. I have been privileged enough to train him, train his wife, be a part of their family for a couple years. So I have had the inside scoop on kind of how incredible he is, his wife is as well, and the ship that they run in terms of their home. How in the world do you do it? For the fathers listening, parents listening, how do you juggle 52 plates, multiple companies, and still show up each and every day for your family?
Yeah. Well, I had good role models. I mean, both of my parents are incredible people. I think a part of my success is the fact that my parents are still around and that I can ask them questions. And, I do think that's been a massive advantage for me. I've married very well. I think whoever you marry is the most important decision you will ever make. And having Sharon there and marrying up, having a smart wife that understands life and business. We make a lot of these decisions together that true. I think that, at the end of the day, it's all of those things. It's my attention to those things. But at the end of the day, I think it's a lot of it too is also my attention to fitness. And I gave up drinking alcohol 2 years. Oh, it's almost 2 years now.
Really?
Yeah.
Man, I remember your first week. No way. It's been 2 years.
Yeah. January 15th of 24.
Congratulations. That's fantastic.
Yeah, so it'll be 2 years in January. And really that with just really continued fitness, like I work out, at least 5 days a week, sometimes 6, sometimes 7 days if I can. I always do it. Today was a great example. I was so tired. I didn't sleep much. And I was like, I'm not going to, you want a full workout. You're not getting a full workout today. And I just did a hard cardio workout on a machine that I haven't used in a while. And I was like, I'll just do this and it'll be hard for me and it'll challenge my body. And that's it. I did 25 minutes and that's all I had. I was gassed. And so I think, and talking to you about, how to, stay healthy. And I know you have this holistic view about how you, obviously the most important thing is that you can not get hurt, not get injured, and continue to train. And so I just really continuously stay on top of it. And I try to do stuff. And then I've listened to my body too. I used to play basketball and I gave it up because I was in too much pain.
I know it hurt because I was just getting drafted to the team and then you gave it up. It felt personal.
I know it wasn't personal, but I think it was just like listening to my body. So I think those, like, the more healthy you are, the more present you are, the more you can do. And really giving up alcohol was like what I've done pretty well. Like how much better can I be? Like how much more can I do? How much more present can I be? And Andrew Huberman is right. It's literally a game changer, and I don't know what I would have done if I didn't do it, and just the amount I can do now. I mean, as you mentioned, I have 5 businesses, 3 kids, an Airbnb business that's separate. I mean, I have all these things, plus I have my family here. I want to have a social life, and I want to go out and go to games, and I went to my first hockey game last week. I want to be able to do everything, obviously. I want to do it all, but then I don't want my kids to hate me too. So it's, I think it's just a combination of I think being healthy though has been the biggest. It's just the attention to the food, to the supplements, that just staying, and it's you just feel better and better. And then I try to mentor people too about this. And I have a few people under my wing right now that I'm coaching and trying to get them and trying to so it just, I just feel like day to day I'm inspired to try to do better in my own life, try to do better with my kids and be around them. And then I think the last thing is I have people that are high achievers around me. My partner, Matt, to Sharon, to I've added more high achievers. And when you're around high achievers, man, you better fucking step up.
They're moving
and they don't care. They don't have excuses. And so I remember a few years ago, talking to Matt, he had a surgery and then the next day he was back at work and I was like, oh my God, I remember a weekend I'd be hungover and then Monday I wouldn't feel good and I couldn't do stuff. And I'm like, how am I going to do all this? And and you know what? It wasn't even a competition. It was I just want to be on his level. I want to get to that level. And so I think seeing those people around you, it inspires you. You don't want to be, the person that's not keeping up. You don't want to keep, I made a commitment to him and we're going to build this thing and we're going to do this. And I have a commitment to, we have 30 employees in Noble Gold. I have a commitment to them and, they're living off Noble Gold. This is their livelihood. I have a commitment to them to make it the best. And I think I've talked to business owners that are just trying to coast and I don't want to say it's selfish, but in a way it kind of is selfish in that if you're trying to coast as a business owner, you are not giving your employees an opportunity to have the best quality of life. And they're suffering because the cost of living is going up dramatically and health insurance costs are going up and they want to do stuff and they want to have kids and so if you're not making your business better, you are actually doing a disservice to them. And I would say that anyone that works for a company that the owner is coasting, I would get the fuck out of there because It actually does affect you. And either they need to hand that business over to somebody that's willing to grind and make it better, or you need to find a better place, or you need to start your own thing, because you will never get to where you want if you don't have somebody in the leadership seat that wants the company to grow.
Love it.
And that is the truth.
I'm going to use this as my last, I think, question here as we wind down. You had mentioned the fact that you just, you made all these changes and you're chasing it at such a higher level because you felt inspired. What was the things, the mentality, the shift, whatever it is, what inspired you? What was that?
I think it got a little harder in my gold business, and I had to do some layoffs, and I had to restructure, and I was afraid a little bit, and I remember waking up one day and going, I miss this. I miss this fear of the beginning, because once you hit a point with at Noble Gold, I mean, we did $500 million in sales in our 5th year of business. So we went from 0 to $500 million in 1 year. The year before we did $400 million. So we hit sort of a pinnacle, and I thought this was the top, and then the sales dropped, and then we did $300 million, and then $200 million, and then it got really hard. And I remember I was like, gosh, this is so hard, and I don't know if I got it in me. And I remember waking up one day and going, this is the best thing that ever could have happened to me. And I had a guy try to steal from me, and I had all this bullshit happen. And I just remember I woke up and Sharon's like, dude, this is what you live for. You love it. They're like, people are saying you're not going to do it. And, it was and I was like, yes. And then I was just it woke up and I was like, this is the greatest thing that ever could have happened to me, was that the fear,
Hell yeah.
This fear is a big driver, right? I didn't want to let people down, and I didn't want the business. And so it just makes you super focused, and you just cut out all the bullshit. And it was exciting again. It got exciting. And that's.
And I think realistically, anybody who's ever been in the entrepreneurial journey knows that fear that you're talking about. If you've started something, you know exactly that, what awoke in you again. That's awesome. It's inspiring. Cool. Well, listen, Colin, I can't thank you enough for hopping on today.
Josh,
I really appreciate you, man. You know that. This has been wonderful.
I miss you.
I miss you too. I would say let's play basketball, but that's out. We're on to pickle. We're on to pickleball.
Pickle's fun. Yeah, I'm in a
bet.
Yeah, I'll do some pickleball.
I'm a pickle hoe. All right, buddy. Well, thank you so much. Colin, so actually before we log off, where do we find you if I'm starting to be inspired, actually, if I want to get into some gold and silver? Tell me the socials, the links. Tell me about it.
NobleGold.com. I have a YouTube. Pull an agent. There's a lot of things that can happen as business owners. So anybody wants someone to help them with that HR payroll piece, we can do that. So Guardian Payroll and HR. And then there's other stuff too, but those are the main two ones that, I came on and talked about. But yeah, fun podcast. I love that you're doing this, Josh, and you're going to kill it out there. You got a great personality, and just, keep it coming.
Hey, I have you to look up to, right? Inspired by those around us. All right, buddy. We'll talk soon.
I look up to you because you're taller than I am. But yes. All right, brother. Thanks, man.
See ya.